All right, ladies and gentlemen, thanks for coming tonight. My name is Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many years. We always have a busy calendar of events. I'd like to highlight a few events that are coming up. Thursday, November 14th, Venture Capital Panel, Finding the Right Investors for the Long Term. That's just a few miles away from here in Palo Alto. The week after that, Thursday, November 21st, Venture Capital Panel, Investment and Latest Innovation in Robotics, again, in Palo Alto, a few miles from here. Further on down the line, December 5th, Ben Horowitz of Andreessen Horowitz at the Santa Clara Convention Center in collaboration with the Commonwealth Club. So check out the details for those events and all of our events on our website, ideatoipo.com. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 60,000 members among all our meetup groups in the Bay Area. We've organized, promoted, and produced over 2,100 events. By any standard, by any measure, we're the most active, most prolific startup event organization in Silicon Valley, bar none. Okay. I feel compelled to expand on that. So if we're the most active, most prolific startup event organization in Silicon Valley, and Silicon Valley is the global center of innovation and entrepreneurship, that would make us the most active, most prolific startup event organization in the world. I was waiting for that here. What happened to that? That's okay. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is an aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley or the San Francisco Bay Area? All right, so who here was born and raised in Silicon Valley or the greater San Francisco Bay Area? Wow, 7 natives today, that's awesome. Let's hear it for the natives. So whether you were born and raised here or just arrived last night, it is important for us to provide multiple channels for you to meet people, build relationships, and grow your network. In addition to our content-oriented events throughout the week, we also have some fun events on Friday nights. The next Friday night event we have is a TGIF mixer, thank God it's Friday, at the Hyatt Regency Santa Clara on November 15th. So you're all invited, check it out, and hope you can make it. With regard to value, it is important that we provide value at each and every one of our events. So we make sure our events are affordable because we know many entrepreneurs are struggling financially. And if you cannot afford the cover charge for whatever reason, come talk to me and we can work something out. And at each and every one of our events, we make sure we provide a delicious buffet meal. Is that a delicious buffet meal? Well, let's hear it for Wilmer Hale for sponsoring that delicious buffet meal. Our delicious buffet meals are usually not that upscale, so maybe next week it might be Costco Pizza or Panda, but enjoy it while you can tonight. More importantly, though, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger, besides our panel? Someone always raises their hand, but not today. So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do. Law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, lots of other players in Silicon Valley. Tonight, once again, we're grateful to Wilmer Hale for hosting us at this beautiful venue. Is this a beautiful venue? Yeah. It's beautiful. And providing the buffet meal, and providing us with an awesome moderator. So let's hear it once again for Wilmer Hale. A couple of our other partners are here tonight. I would like to have them come up and say a few words. Let's hear it for Anita and Happiness Factors. Applause.
Thank you, Rob. My name is Anita. I'm the founder and chief strategist of Happiness Factors, the Sandy you have behind you. And at Happiness Factors, our goal is to provide so many happy mindsets and create so much happiness that we eradicate depression globally. And our mission is to be the go-to company for all your emotional wellness needs. And currently, we are looking for some animators and some affiliate marketers. So if you are interested or if you know someone, please let me know. And we not only help you find happiness, but we help you sustain it. And will you believe we do that without the use of drugs, alcohol, or marijuana? So if you need to find the secret to not just find but sustain happiness and at the same time save money, why spend on those drugs, right? So come see me, I will be around, and thank you, Rob, again for giving the opportunity to talk about happiness factors. Keep smiling.
So I wanted to confirm that there's no alcohol, drugs, or marijuana at this event. At all our events, those items will not be.
I'm already enough, right?
Yeah, so she's enough to make you happy. So next up, we have Arjun and Pritatex. Applause.
Thank you. Hi, my name is Arjun Banerjee. I'm working on a software that actually helps anonymize company-sensitive data. So if you want to anonymize your data set or to actually comply with CCPA or GDPR, please come see me.
So though our local mission in Silicon Valley is to support entrepreneurs here, our global mission is to democratize entrepreneurship and innovation all around the world. To that end, we maintain a robust YouTube channel, youtube.com/idea to IPO. Go check it out. We have tons of videos there. We've archived, documented, and organized many of our events. And this rich, valuable content is available on demand anytime, anywhere, totally free of charge. Whether you're in Palo Alto, New York, LA, Maui, Moscow, or Timbuktu. There's Wi-Fi in Timbuktu, by the way. Our partner in this endeavor is Tim Jeggers of Jeggers Films, one of the top professional videographers in Silicon Valley. So let's hear it for Tim.
Thank you, Rob. Thank you, everybody. So I'm Tim Jeggers, Jeggers Films. I specialize in video production. I also do all kinds of other multimedia content from photography and website design. I do a lot of product demonstration videos, product photography, real estate, event coverage, promotional content, social media plugs, pretty much anything that you would need for a video. I've done maybe like 8 of the 10 things that you could probably come to mind. So if you have questions about anything that I'm doing or where to find this content that I've been working on with Rob for several years, feel free to talk to me. I'll be over there and lingering around afterwards. And thank you for coming.
All right, well, ladies and gentlemen, here's the schedule for the rest of the evening. Our panel will launch into a compelling, insightful, entertaining, dynamic discussion, right? Audience members, hold your questions until 8 p.m. At that point, we'll open it up to the audience for questions. We'll actually have a little line here, and we would like to use the lectern and the microphone for the questions. That'll take us to 8:30 p.m. At that point, we'll end the formal program. We actually do have a raffle. This is the prize. Hello, my name is Awesome, How to Create Brand Names That Stick by Alexandra Watkins. She's one of the speakers on our platform. So after that, you can stick around, network, socialize, and connect. As a courtesy to Wilmer Hale, we would like to leave the building by 9 p.m. If you want to keep the conversation going, you can meet me at the Rosewood. It's Thursday night. Enough said. At any time during the formal program, you need to get up and get more food, use the restrooms. It's okay. It's a very informal atmosphere. So at this point, I'm going to pass it off to our distinguished moderator. He is one of the top corporate stars attorneys in Silicon Valley. He's a distinguished member of this firm, and he's passionate about helping entrepreneurs succeed. So let's give it up for Glenn Lunenberg.
You did, yeah. It's Glenn Lunenberg. Thank you very much, Rob. And we're really happy to be partnering with Ideas to IPO tonight for this this great panel on the investment in latest innovations in artificial intelligence. As Rob said, I'm a corporate partner here at Wilmer Hale. And my practice focuses on companies at all stages of development, from the earliest stage startups. We do formation work. We help with seed financing and later venture capital financings, and can guide you through sort of all the stages of a typical startup, right through to liquidity transactions, whether that be an M&A transaction or an IPO. We were just saying that we understand the alliteration on ideas to IPO here, but nowadays the more appropriate title may be ideas to mergers and acquisitions, because most companies are sold before they do IPOs. So with that, what I'd like to do is, we have a very distinguished panel up here tonight, and I'd like to ask them to introduce themselves, give us a little bit about their background and their experience in AI. I'd like to start at the far end with Vijay Reddy. Vijay, could you grab the mic and start with the introductions?
Hi, my name is, can you hear me okay? Oh, yeah. So my name is Vijay. I work at Intel Capital, focus on AI investments, primarily the infrastructure and applications of AI. And I joined there 5 years ago. And for those who are not familiar, Intel Capital is the venture arm of Intel Corporation. We tend to act more financial with a strategic focus in the sense of how do we help companies through Intel. And we have several broad areas. AI is just one of them. We invest typically $350 to $400 million every year. And we're one of the most prolific VCs in AI.
Hi, good evening. My name is Mike Dolbeck. I'm with GE Ventures. I lead a team of people that focuses on, broadly, the software innovation issues relevant to GE. And so we have a large portfolio of investments that span from healthcare to the future of aviation, the future of energy, the future of a lot of things. Increasingly, data and software and AI techniques are important to the evolution of all of those products and markets and businesses. And so we've been an active investor in, among other things, companies that use AI to generate valuable outcomes for our customers. Is that better? Okay, good.
Okay.
Hi everyone, I'm Kanu Gulati. I'm very excited to be here. I'm on the investment team at Khosla Ventures. We are one of the seed Series A, so early stage venture capital firm here on the Valley. We like to invest in things which are technically exciting and have a deep vision. AI and autonomy is fairly central to our investment thesis. My background is in deep tech, so I did my master's and PhD in electrical engineering, and I was a research scientist at Intel, who funded my PhD, so thank you. At KV, I focus a lot on AI applications for the enterprise and the ecosystem around it, so everything which is, say, robotics, last mile delivery, autonomous driving, speech, image recognition, etc. So again, very excited to be here. Thank you.
Thanks, everyone. So I'd like to just do a quick poll of the audience here. How many, and maybe you can just raise your hand to let us know, it'll sort of help frame the conversation, but how many of you are founders of an AI startup? Okay. And of that group, how many of those startups have, what we would generally consider traction? That you have a product in the marketplace, you have users, you have sales, you have revenue. Okay, that's great. So how many folks are investors in the audience? A couple? Yeah. Great. And how many are employees of an AI startup? All right. Well, that's great. And who's just sort of curious about AI and wanted to come to this thing because it sounded interesting. Yeah, small group of those folks too. So, artificial intelligence as a term has been around for a long time, but for the past couple of years, there's certainly been a lot of buzz generated around artificial intelligence. So the question I have, the initial question I have for the panel is, what exactly is AI? In your view, what are some of the hotter areas in artificial intelligence? And so maybe we can just start generally with definitional. What exactly is artificial intelligence?
I can start, or at least share our thesis or our view of the AI world. We like to bifurcate it based on, what is considered as feature engineering in AI. So if it's very manual, we consider that more part of advanced analytics. If it's more automated, the feature engineering, like where you're identifying what do you need in order to make the prediction, the models. So unsupervised learning is what we see as the more recent and more exciting advancements in AI. So that would be my bifurcation about how I think what is AI versus what is advanced analytics.
Someday, I think we'll look back and think that this question is silly because everybody will use whatever technique makes sense, and often those will involve taking a lot of data and doing something wise with it that makes people more productive. So I'll answer the question, the kind of investments, the kind of companies that we invest in that use AI techniques generally have that combination of access to a lot of data, access to some existing way of doing things that they would like to improve. And in general, there's a business goal of creating a valuable business outcome, generally substantially better than what people can do today, either because it just saves a ton of money or it makes the existing staff much more productive, so you don't need to, it helps the business scale because it's no longer how fast you can hire people, but maybe some fraction of that. But I think, to answer your question, I was being flip. I think we generally consider, there are a lot of companies that use one or more AI techniques to achieve a interesting outcome that's a multiplier effect because of automation.
Yeah, I think AI is so broad, right? I think I was a double E as well. We used to use linear regression in school. That was not called AI, but technically it's AI, right? So a lot of startups use analytics and call themselves AI. So the way we look at least our AI portfolio is, we call them AI first companies, which is AI is your first class citizen. It's not just a means to an end, but it becomes a core capability for your end goal, right? So if you're looking at ROI, how does AI directly help in the ROI? So that's how we look at AI first companies, and it's got to do with the culture, the team, and a lot of other attributes which we look at an AI first startup.
Yeah, that's great. The second part of the question was that artificial intelligence obviously has been around for a long time, and we're seeing a lot of buzz about it right now. So what's changed? Like what's different this time? Why are we seeing such a focus on artificial intelligence now?
Yeah, I think it's a combination of several factors, and if you go and do the AI 101, people will talk about how data is being generated at a massive scale. You had the big data movement, and now there's a lot of data coming out of sensors, and there's just data available to be mined. The second is the algorithms have changed, and I'll talk a little bit more about that. And the third part is this is more compute, and you couldn't have done this many, many years ago. And again, this is like companies like NVIDIA and Intel and others are building a lot of cool hardware to monetize AI. But I think a lot of going back to the algorithm piece, there's a lot of step function improvements over the last few years, right? And one of them is deep learning, and within that there's so many different capabilities. And more importantly, the amount of people sharing latest advances in AI. I think it's catalyzing this whole AI frenzy, right? Is it a fad or is it real? I think there's a lot of hype around just the terminology of AI and how people are calling it AI, but the real benefits are actually very tangible. So I think AI is real, but maybe the hype is more than what AI can deliver, I guess.
I agree with everything that you said. I didn't go through my whole background, but my exposure to AI started, I'm an AI winner survivor, not nuclear winner, but AI winner survivor. So my graduate degree's in AI, but it was pre-winter in the early 80s. And so what's different now, I think, is that a lot of these techniques, most of them have been around for a long time, but as you point out, computationally, only since about 2010 has deep learning been actually fun to do because you can generate interesting results. And it's also generated some substantially remarkable and commercially valuable results. It is not the only technique. It's got its time in the spotlight, and I fully expect other techniques to get their time in the spotlight. So what's changed, I think, is that speaking as a survivor of the first AI winter, the results, the hype is about the same. I feel like the oldest guy, talking about the past, but it was extraordinarily hyped in the past, and most of it was BS, and I'm responsible for part of it. But I think there's actually commercially demonstrable results. But you have to take things with a grain of salt. We play bingo at our firm when we see business plans that include the words AI,
Quantum,
IoT, and quantum or something else. You have to stand up and say bingo, because there are a lot of people that just say they use AI techniques just to sort of attract investor interest. And I think that's no longer table stakes. You have to actually do something valuable with it.
The thing I would add to what is changing now is, people have identified that there are certain data sets which become very exciting, and so say towards the end of 2000s, we realized that ImageNet is a good database to, or a good test benchmark to solve for, and with the compute and the interest of the community, there was a lot of focus, and we saw backpropagation was working and became really exciting to show. And now ImageNet seems like a solved problem, that image recognition works very, very well. Of late, in the last couple of years, language models have seen a lot of advancement. 3 years ago, or even 2 years ago, we were talking more of LSTMs, which are long, short-term memory-based models. And now we're already talking about GPT-2, and BERT kind of models, which OpenAI and Google have been evangelizing. And so over the last year, I think we've seen more advancements in language models than we've seen in the last multiple decades together. So we as a community, we have the access to more compute, we have the access to more publicly available data sets, and the targets become more accessible, and we're going after them as a community and solving one after the other, whether they're games like Go and Dota, or they are language models that we're trying to solve for. I think together all of these things is really making a difference in AI this time around.
That's great. Thanks, Kanu. So, it's interesting, as Michael said, a couple of years ago, every company became an AI company. They incorporated it in their business plan. What kinds of AI startups, and you can be specific about sort of your area of focus. We have one venture VC here, and 2 corporates. Maybe you can let us know what kinds of AI startups you're specifically investing in right now, and generally what type of AI startups you feel have the best chance of being funded. Vijay, maybe we can start with you on the end.
So for the way we look at AI portfolio is we look at the whole stack of AI infrastructure. So we've been investing in silicon, which is the base layer. On top of that, we've been investing in what I call the picks and shovels, where a lot of enterprises have to have those capabilities. So that's model building, data prep, and model serving kind of infrastructure. And then on top of that, we're looking at a lot of horizontal layers, whether it's computer vision and speech and text, and finally the vertical applications. Autonomous is one of them. Robotics. We've been investing a lot of time on the B2B enterprise stack, like customer service and so on. And one of the areas we're particularly excited about is using human in the loop. We've realized quickly that AI can't deliver all the things that have been promised in the past. And for very broad use cases, it might be helpful to have a human augmenting the intelligence. So that's an area of current focus for us. But otherwise, a lot of our investments are picks and shovels kind of investments.
So I think there have been several waves of investment. First in commercializing what was a research technique. So tools-based investing, I don't know what you want to call that category. The next wave is, this is not specific to AI, but it's gone through that. Then there was a kind of general platform infrastructure-ish picks and shovels. The majority of companies were those. And I think now that we're on to the, at least the majority of companies that I'm interested in, I'll just narrow it down, are full stack companies that have a business solution. They happen to use AI techniques, but I don't really care what techniques they use. I care what the customers want to pay for. And so the companies that we've been investing in lately achieve dramatic commercial results by using AI techniques and large data sets that are available inside companies, combining that with subject matter expertise. Remember, I represent the strange world of industrial stuff, and so there's a lot of tribal knowledge, there's a lot of resistance to change, and there are often humans in the loop making tough decisions about how do we extract maximum value out of this big hot spinning thing that we bought, and it's so expensive it needs to last for 30 years. And we can't afford it to stop. It'd be inconvenient if the lights went out, right? And so the decisions of the people that run large companies that operate assets for a living, like a power company or an airline or a rail company, have a lot to do with keeping the stuff working and allocating capital and people. But the highest margin companies, the best results that we've seen are ones where AI techniques augment usually a team of human decision makers. I'm not counting healthcare where you're augmenting usually one or a team of physicians, but it's some sort of decision that they're using available data, they have some intuition, they have a lot of experience, they're making a judgment call based on their experience, and their capacity to make those high quality decisions consistently over time is improved because of, in some sense, because of the AI techniques. Oh, sorry.
So to answer the question, like what kind of AI companies are we funding or we looking at? At the outset, the kind of companies we look at need to have a huge vision because our main fund is $1 billion, and so we want to invest in companies which aspire to become billions of dollars. So the huge vision part is important, and the other is what is the unfair advantage going in. Lately, the companies which we see have an unfair advantage are applying an AI technique, but also come in with either an unfair advantage in terms of data they have access to train their models, or the quality of the team, and or have a very clearly defined the ROI for their customer. So these are some of the essential components for AI, because it's harder in some cases to show the value. To your point, if it's very narrowly defined problem, then a very narrowly defined task, then maybe a completely automated solution will work from the get-go, but usually it's not, and so it takes it's a harder task to share and explain what the ROI is with the human in the loop. So oftentimes it takes longer for the solution to get the traction we want for the next stage of investments, etc. So the unfair advantage in AI can be in terms of data acquisition or training data sets and the team, and that's what we look for now.
Thanks, Kanu. That's interesting. I'd like to dig into that one a little bit more. There's lots of great ideas out there. There's lots of opportunities to use artificial intelligence and to bring it to a specific problem and to use it in a way to get a better solution. But when you're sort of analyzing a particular startup, outside of the sort of problem that they're looking to solve, what additional factors do you consider? And you touched on a little bit in terms of the team and the unfair advantage to the data set. But what gets you from, wow, that's a really good idea, to, wow, this is a company that we want to get behind and write a check to support for the long term? Maybe you could dig into that a little bit more.
Sure. I'm not trying to shamelessly plug a few of my companies, but giving an example might help. For example, we led the investment in Voyage, which is an autonomous, self-driving car company. What we like that company is, of course, the team and data set and everything is very exciting, but it's a huge vision that they're going after, self-driving, the autonomous driving market. But at the same time, they don't have the deep pockets like Google has to back a Waymo equivalent. So what we got excited about it is also the ROI vision early on. So what they're going after is private communities. So think retirement communities, which in them are small cities in themselves, and trying to solve the problem for them. So it's an easier version of the problem because they can install an extra sensor on this unprotected left turn and make the problem easier for themselves. And the speeds are slower, and they can operate in certain conditions and have better lighting at all times. And so it's an easier version of the problem, and it becomes more tractable. So getting to market becomes easier. So in that case, it made sense that their ROI definition gets better if they define this market segment differently. And so we get excited about opportunities where the combination of the technology, data, compute, all of that, but with this ROI that can be identified at the outset and saying, okay, this is in this investment, with this investment, these are the few risks that we can retire, and that can be very easily and clearly articulated, and so on.
So I have to qualify what do I look for is the question. And beyond the generic great team, big market, all the rules of thumb, remember that I'm focused on trying to advance the strategic benefits for General Electric, who participates in a variety of businesses globally, but not all businesses. And so often what we're looking for is somebody in the company, usually the founders, having a unique understanding of the job to be done. They're often from another industrial company or from a supplier to industrial companies, and they're very familiar with the unique kind of weird parallel universe of industrial operating situations. The companies that have done the poorest are companies that are staffed with very smart people but just don't understand the customer situation very well, and thought that they could come up the learning curve quickly, and they found out that it is a rather steep learning curve, and it has been difficult in this valley to find many people that have that previous experience. But if you do find them, and they do appreciate some of the pain that these companies go through, then it can be very valuable. So it's some combination of either subject matter expertise on the AI side, but frankly more valuable is understanding the selling motion required to get the attention of and not scare a large industrial company. You know, what partners do I need around me in order to look safe enough to talk to? Because a lot of very large companies are designed to repel and ignore startups and with new ideas, and that's probably doubly so for industrial companies.
I think just to focus on the technology aspects, right? I think I completely agree with Mike that our primary focus is on the team, and it's have you sold this technology before? Have you do you know the challenges of the problem and so on? But just to go back on AI, pretty much every company as an AI investor we see has some form of AI, right? And we completely discount all the kinds of AI to start with, right? It's what is the ROI, and once you start digging into that, then how does AI actually help? And once we know what the AI is, and then we ask like, what kind of data sets do you use? If you say you have the best algorithm, it's hard to buy that because AI is changing so fast that you can't have the best algorithm sustained over a long period of time unless you have a really good team. And in a lot of our AI-first companies, we tend to back people who are very strong operationally and who also have a senior management of AI people. And disproportionately, we back a lot of professors, we back a lot of AI researchers, but in combination with domain expertise. So that's how we tend to look at a core AI portfolio.
Oh, that's great. That was very insightful. What do you see happening in AI in 2019 and over the next couple of years? Do you see the investment trend continuing, and what areas do you think are going to be most heavily invested in the immediate short term?
So I think is the funding going to increase? I think it is. There's going to be a lot more funding in AI. We're going to see some potentially high-profile AI companies not making it in 2019 as well, just because of how much funding has gone. The valuations have far exceeded their core unit economics. And so we'll see all of that. So we'll see some high-profile busts. We'll see a lot of companies raising a lot of money. But I think from the third part of the question was, what kind of companies or what kind of AIs are we really excited about? Again, going back to not just the AI itself. I mean, the techniques are interesting. There's all kinds of new algorithms coming out. But the application of algorithms in places which have not been used before. I think one area we're getting excited about is legacy industries which have never used AI, have a lot of data, but you apply AI now and we can see the ROI. So I think those are areas we're particularly excited about. Autonomous and robotics, those are usual suspects, and I think we've seen the wave go back and forth on those in the last couple of years. I think legacy industries is where we're particularly excited about.
So the question was, could you repeat the question?
Yeah, sure. I was just interested in what direction do you see AI heading in for the remainder of this year and the immediate short term? Where are we going to be seeing areas of investment?
So I think healthcare is I'm not a healthcare investor, but I tag team with our healthcare partners, and there's a ferocious investment pace in data-enabled predictions and decision-making augmented with AI. I think that it's not clear yet what the recipe for success is, because you can demonstrate something interesting, as we were talking about in the prep session. There are a large number of companies that have been financed to recognize, basically it's an image recognition use case. Something in the X-ray is significant, and you're helping radiologists in a particular use case identify a clinically significant thing. But there's, even after you can demonstrate that, there is often a significant journey to build the rest of the solution that a hospital actually wants to buy to go with your point product that can do something with an image. And so I think that the pace of investment in healthcare-related startups is not going to abate. One thing I'm seeing now is we talked about the popularity of deep learning, and now I see a lot of startups. I'm not saying this is a great idea, but often this happens in investment waves where there's a super popular category, and then people actually struggle with the nitty-gritty of putting those solutions into production. And other people say, oh, there's a bottleneck here. There's a problem with training, or there's a problem with tagging images for training, or anyway, there's a number of bottlenecks associated with the deep learning workflow, which companies are chasing to, I guess, be part of the tool chain that other companies that are trying to sell autonomy to auto OEMs. And so there's kind of a second knock-on effect where tools companies are trying to solve the problem of deep learning companies and ride those coattails. And it's natural to see that. I don't know if that's sustainable. There's also a large amount of money going into silicon acceleration of the various problems associated with the deep learning workflow. So it's getting quite a wide variety of companies in that space trying to solve problems that somebody else in the stack has above them or below them.
Yeah, I'd like to just echo that thought. Yes, a lot of the adjacent space, adjacent to the core AI techniques. So that is the infrastructure needs that you have, tools, the ML ops, etc. So there's a lot of category that's a category which is growing really quickly. The hardware for AI, that's a category which has seen a lot of money being raised in the past 2 to 3 years, and I think it will continue in the next few years because the compute, a lot of the AI companies are very, very compute heavy, and so they will, create the demand and continue to fund such opportunities. There's also a growing, within the AI techniques, like deep learning is one technique, but people are trying to couple that with, can you make a model of the physical world and combine that with deep learning? Or Bayesian techniques, or et cetera. So even that is seeing a lot of advancements. And then there's also a class of companies out there which within the language models I previously mentioned. Again, the applications are huge. The markets are huge, and so there's a lot of innovation happening in a lot of these adjacent areas, and so yeah.
That's great, Kanu. We've certainly seen a lot of foreign investment in recent years in robotics, in hardware, and sort of related AI applications. I guess my question for you is, what is the impact of foreign investment in artificial intelligence, and do you see any sort of trends in that regard?
That's actually my biggest worry with AI is having international forces that we are not completely aligned with in terms of how we think about humanity and humanity's rights, etc. And these other forces becoming more powerful, which either because the investment coming from the state or the country is both in terms of just capital and then also access to data, etc. is not restricted, and then also United States the visa policies of having the students and the teachers and the right programs getting funded or not. So that's actually my biggest worry about the external powers getting access to AI and becoming stronger in AI than us.
Go ahead. I think I'll take a slightly different on this one because we have a pretty big investment team across the globe. We're investing heavily in Europe, we're investing in China and other places, right? So, without going to the political aspect of it, just to be factual in terms of what's happening, There's the CFIUS regulations which are playing heavily right now. So a lot of countries have taken a very nationalistic approach to AI, and it's not just China or US or Europe, but they've been very protective of their AI capabilities, right? So I think the flow of capital in the US has dramatically reduced from some of these countries because of CFIUS, and I think it will stay there for at least the foreseeable future, right? And I'm not sure if it's going to help the US economy or it's going to hurt in the long run, but that's the state of the union right now.
I think I lean towards, I resonate with your answers. We're a global company. We have customers everywhere like Intel does. I have portfolio companies with Chinese investors, co-investors, Korean co-investors, most of the countries in Europe, investors, pretty much anywhere there's an oil company, so Saudi Arabian investors, Malaysian investors. CFIUS is an issue that concerns, I think, it concerns wise investors because you're worried about the future financeability and the investment risk. And so if you have a choice, most AI companies don't really have too much trouble raising money. CFIUS, I guess, is having the result that the authors intended, which is to hassle the sources of capital that we might be concerned about when we make our minds up whether we're concerned about them. I haven't had a company that's gone through a CFIUS review, but when we've taken money, say from Chinese investors, we frequently have them agree up front that if there is a problem later that the US federal government decides they don't like that particular level of involvement, that they agree to a variety of things. If they are on the board, they'll step off the board. If the government says they need to sell their shares back to the company or the investors, they agree to do that. In advance, it's in the documents. And we haven't had any trouble getting most of the potential Chinese investors to agree to that. I think they have processed that now. On the other hand, if you're a Chinese venture fund trying to set up an office in the United States to invest in AI companies, it's very difficult to make an investment. It's difficult to recruit people that know what they're doing to come to that entity to make investments. So that's had a sort of dampening effect, but it hasn't really. I think we've been factoring it in for a while now.
And do you think that's slowing innovation in?
Nope.
Not at all?
Nope. Not for us. It's at least my company. I can only speak for my companies. So, but the investments that we have from Chinese companies are often because they want the company to come to China and they want to introduce them to the state oil company or power company or rail company. And usually the startup is so busy that they accept the money and they say, at the right time in the future when I have the capacity to go there with your help, I'd be happy to go. But they're just too busy to get there. So if somebody said, I'll only give you money if, actually somebody did say, I'll give you money if you more or less give me an effective monopoly in Asia. Yeah, that's an easy one to laugh off and say no thanks. And there were no tears involved in that deal.
Do you have any thoughts on that one, Connor? No. Yeah, I spend a lot of time dealing with CFIUS issues up front on the investment side, but we're seeing it more in the M&A context when you have a Chinese purchaser of a company, a U.S. company with substantial U.S. presence and that has significant artificial intelligence assets. It's certainly slowing down the process for liquidity. It's not that we can't get it through a CFIUS review, it just needs to be factored into the timeline now, and it can add significant time into the liquidity transaction later on. So,
Do they pay a premium then? Can you negotiate a premium for all the hassle they have to go through?
yeah,
to
of
sell it to
course.
them?
Yeah,
Okay.
I mean, there's always a negotiation on who pays for
Right.
CFIUS review. So I don't think we'd head into CFIUS tonight, but it's hard in today's investing environment not to cover that topic. So this is, if you could predict into the future, and I'm not talking a couple years out, maybe 5, 10, 15, 20 years from now, give me your best opinion or view on where do you see AI heading in the long term?
I can tell you what I hope for. My crystal ball is as good as yours is, but I think what I'd like to see, there are a lot of exciting results that are possible from, take deep learning, take the autonomous driving use case, which we're actually not investors in. That technique generates fabulous results, but it's also very brittle and particularly impaired in situations that require, that we take for granted, a lot of common sense reasoning as it's known. So there are things that we learn as children and later maybe teenagers about the physical world and help us ignore a lot of stuff or prioritize things that are urgent to take care of. And deep learning solves that problem by throwing enormous amounts of use cases at things. If you could combine the two, I think you could make and extend the power of deep learning, or deep learning plus common sense reasoning is something I'd like to see happen. I think there's lots of research, there's lots of failed, broken ships on the rocks in that case, but that would make what's possible much more valuable in the real world, I think.
I think a couple of thoughts. I think one, like AI is very narrow now. I think being able to generalize some of the AI aspects into more broader, not so much on the cognition level, but being able to generalize AI for a variety of different tasks, I think is exciting. But I also think, just from a socioeconomic perspective, it's like a sword in your hand, right? It's two-edged. There's a big difference between haves and have-nots in AI, and that comes from either countries or places that have invested in technology, they've invested in compute and cost, and so it's almost like a bazooka in the future. And I think being able to get AI in the hands of everybody would kind of create some equality. But otherwise, the way it's going right now, and which makes me worried, is countries which have data and access to AI are progressing much faster than countries which don't, and that's creating a lot of divide.
I can't disagree with everything you've said. This is all the things I would want, and I agree with that. What I would say is, there are advantages of investing in AI because we all get the benefits from it. From everything from a better recommendation engine to autonomous driving, or our doctors getting better high quality, augmenting their tasks, etc. But we also have to worry about that, not just across countries, but even within the country. The income inequalities will increase because of just more automation overall, and which types of jobs get automated sooner versus later, etc., will create more problems, and those are the things we get to worry about, but hopefully have and vote government officials who can solve those problems for us. What I get excited about is just eventually someday, not in the 5-10 years, I think more than 20 years, we will get to artificial general intelligence, and that's exciting from my technology optimist classes.
Yeah, I mean, what I'm most worried about is that the AI startups will eventually take away my job, and we won't need lawyers anymore, and we'll take away need for venture capitalists because we'll figure out an algorithm to predict who's going to be a successful startup. But I don't see that happening anytime soon. So with that, I think that's a good place to pause. We're maybe 2 minutes before 8 o'clock, but what I'd like to do now is open up the floor for questions for anyone on the panel. I think the process, as Rob said, we'd like you to come up to the podium here and ask the question just so that we can capture it on camera here. Does anyone have a specific question for the panel at whole or any individual panel member? Please, just, come on up.
This is a good filter for people who are brave enough to face the crowd.
Well, let's hear for the panel. We're going to do Q&A for the next half hour. I want to make it clear, though, this is not a pitch event. So no pitches or thinly disguised pitches. And if you do execute a pitch or thinly disguised pitch, we have a bouncer. So anyway, that being said, go for it.
I have a question for our VC friend and also for the corporate VCs. So if you would invest, let's say, $10 million to a startup, and then 2 years, let's say 3 years, what would be a good exit for you in terms of dollar amount? Is it 2x, 3x? You know, the matrix would be if we come back to you again, we had that YX exit. You say, oh yes, this guy again. Let's invest in him, right? So or her. So that's the first question. And then the other side of that question is, so what would it take for a corporate venture, which we have a partner with, for example, to buy us out at, let's say, $50 to $100 million? What are you looking for? What are the matrix? Is it revenue? Is it that we address significant part of your value chain, or help you to cannibalize your own market and your competitors' market? But could you help us dumb that down and also more particular to draw a guidance or a laser point? What is that matrix? Is there a number involved, and how do we get closer to that as startup founders build our startup with exiting strategy insight as we start? Thank you.
So the first question, what's a good exit number, right? I think how is it, if 10 million, is 20 million a good exit, 30 million a good exit? I think it's a very broad question, right? And the reason I say that is because the way venture portfolios work is 90% of the companies don't make it. The 10% returns the whole portfolio, right? So if you factor all of that in, I think depending on which stage you are, there's numbers out there we can pull up and say what the return profile should be for a fund. And whether it's 3x or 5x, it's very dependent on the industry. It's very dependent on the fund itself. And so I don't know if I can give a broad answer, but I think 3 to 5x is like kind of the number which a lot of funds operate on. So
3 years?
They'll be out of business if they do 5x.
Who'll be out of business?
If you do a 5x return on a $100 million fund and you said 10% are gonna make it.
Yeah.
That's 10 million to pay your founders.
Yeah. So that's why
10x or better return. It doesn't make sense a 5x return.
So that's why I said it's a weighted average, right? Some funds do like 50, some companies return like 100x, that pays for the rest of them. But on a weighted average, I think that's what the Series A and Series B return profile is.
He's talking about a fund return. You're talking about an individual company's return, which is closer to his question. So to answer your question, when I'm investing, I'm really just hoping for a public market, like an IPO or a really, really big exit. So a 3-year exit practically will never get us there. So if you are investing with your roadmap to a 3-year exit, which is perfectly fine, not judging you, we will just not be a good partner for you. So it's very important, and startups or founders often don't think about who they're partnering with and how does the math work for their partner. So there are angel investors whose funds may be smaller, or micro VC funds or smaller VC funds, which say the fund size is 100 million and they own 20% of your investment, say, which has an exit of 200 million. So then that changes the math for us. However, if we own 20% for an exit which is 200 million for $1 billion fund, that changes nothing in the bottom line. So then it's just not a good outcome for us. So the way we see it, if we will just not be a good partner for you if you're looking for an exit at all in 3 years.
So I think the second part of the question is, how do you position yourself in M&A, right? I think it depends on which corporate you're looking at. At least for Intel, the averages are, we typically almost never acquire a lot of our portfolio. It's almost like average. So it's better off, it doesn't matter if you're in a portfolio or not in a portfolio, right? So we don't invest or acquire. But there are some corporate VCs who have a mandate to acquire, and in which case, there's a lot of other factors which play into that as well. So I'm not sure if I can answer the question or not, but
I can try.
Could you also just to say a bit about the matrix? Is it weighted more on the revenue? Is it more weighted towards the technology itself, or what is the matrix?
There's no one answer. I mean, I think A, I don't know what you do, and B, I don't know what the corporate investor in you does or why they invested. But somewhere in there is the answer to how much they'll pay. It has a lot to do with their perception. How desperate are they to fill a hole they don't have an answer to? If they are buying, you're probably not big enough to move the needle, not big enough in terms of revenue. So they're probably not buying revenue. They're buying the prospect of what your technology could do if they sold it to all their customers instead of just you, the small company, trying to sell to customers. But it's a very situational answer. AI companies in general used to be, they often get acquired before they hit, well, by and large, they have been getting acquired before they hit decent revenue. There's obviously exceptions. And so, oddly, sometimes people value them at a multiple of PhD, which is a crazy metric, but
I would just call that an acqui-hire then.
well, that's what most of them are. And so they're not often acquired because they're fully functional businesses that fit right in and plug a hole. It's the team that they want, and maybe some aspects of the product architecture. So there's as many reasons to buy a company as you can think of. You just have to figure out which one your investor is most interested in. Generally, as investors, we don't like you to run a company to be acquired, because that you tend to make some suboptimal decisions about funding. So we'd like you to tell us you're running the company to get big, and then maybe a happy coincidence is you get acquired along the way.
All right, next question. Well, let's try to keep questions from the lectern. If you have a follow-up, just stick around. We want to keep it coherent. Next question, Daniel.
Hi, at the very beginning, you talked about some of the buzzwords like IoT and blockchain and things like that. And I was curious, AI feels like might be getting to a size that there might be almost sub-words that now make you roll your eyes that you hear a lot. And I was curious if you guys had any ideas of things like that you hear a lot now that's starting to not mean as much as they once did.
Until you said that last part, I was going to, there's a phrase I heard that made me roll my eyes. It was quantum learning, quantum machine learning. It's actually, I didn't think it was a real term until I looked it up, and apparently it is. But the person who was trying to convince me their company did it had no idea what they were talking about. So there's usually at some point people say buzzword plus other buzzword, just in case that attracts your attention, even though they aren't quite sure what's going on. Deep reinforcement learning used to be kind of on the fringe, and now I hear it all the time. So I don't know. what makes you roll your eyes is it's usually some combination of unrelated buzzwords, like I said before.
My biggest pet peeve for the question you asked is having a slide deck which says we are going to just imitate the human brain. Because quite frankly, I don't know how the human brain functions. I doubt it if most people who present it understand it. And I would much rather dive deeper into the techniques that you're using in order to build, like what are the AI techniques you're specifically applying or building or solving for, as opposed to, having a cartoon of a human brain on a slide and that, it's a pretty big pet peeve of mine.
Anything that's not a healthcare company that includes the word brain in their presentation, I just forget it. But it comes up more often than you.
So as investors, do you guys use AI or advanced analytics, for example, to make investment decisions yet?
No, because there's just not enough data for us to train a model on it. Too many variables.
Yeah, I think we're starting to use a lot of AI, not for making the decision, but for helping source better deals or even managing the portfolio, right? So we're starting to use a lot of AI on the deal sourcing side.
Yeah, I would say not really for us, but there are a couple of funds I've heard of. Algorithmic Ventures uses some pattern matching, I don't know if you could call it AI, to decide which tier 1 venture funds they should try and follow and get into their deals, because they've tried to play Moneyball with key investors they're familiar with. But even the rating agencies that look at the track records of individual venture funds don't use AI very well. So it's mostly there's just not enough data that's worth anything to train on.
So I was wondering if you guys have noticed any patterns, how some of the successful startups, which by definition start small and they may not have access to the huge amounts of data that larger companies may have. So what kind of patterns some of the successful founders have used to get the flywheel going, or the chicken and egg problem to solve?
The panel talked about, in some cases, having the human in the loop. So the human, using humans to help annotate and identify and create the data set. And that can be, you can outsource certain tasks like use a mechanical Turk, etc., or within the company. So it just totally depends on what market you're targeting and what is the product, and then what is at this stage of the company, what risks are you looking to retire and where are you getting to. But having human in the loop is one way to go around that. As a startup, you may not have enough data or access to a good public data set. But the other is just make sure that increasingly one of the recent causes of why AI has been seeing the growth it has is because the availability of public data sets. And so I would doubt, like, even you mentioned like AI replacing certain laws, and then so you can get data sets for training you on certain document classes. So yeah.
Publicly accessible. So, and just some of our startups are doing some cool things, right? So, one of them is using small data sets, and they're using models to train on small data sets. The other is using like synthetic data to augment the existing data, and some of these techniques are pretty advanced. And third is you don't need to have the largest data set. At least for your problem, if you can collect a decent enough data set and start the flywheel, I think that'll be helpful.
I don't have any good metrics for de novo picking which companies are going to be successful. I mean, I have some, but they're not always successful. But if I look later as to which companies start to make it versus which ones didn't figure it out, to me, what seems to happen is they develop this very sophisticated list of customer qualification questions. In other words, they figure out when to walk really early, and they don't get stuck with somebody that ultimately is going to waste their time and not buy the product. So they carefully figure out how to prioritize their very precious time on the customers that are most likely to close. And that isn't always obvious at first when you start the company. It's often somehow you develop an unfair familiarity with the customer set, and then you exploit it before your competitors figure that out.
Hi, I'm always hopeful that AI can eventually help eliminate some biases in decision making, especially in terms of diversity. And I'm curious if you could talk about any diversity issues you see, that are still existing now, whether it be kind of the investors in the space, or founders, or skewed data sets, or anything like that.
I have to pass because I'm not a consumer investor, and it's less. There's probably lots of bias, but it doesn't seem to have bothered us yet. So it's other than the standard structural bias in most venture teams. I'm actually a minority in my group. I'm a tall, old, white guy, and male. And so most of, I think at least half of our partners are female, and lots of different cultural backgrounds. So we have a diversity of thinkers and decision makers and backgrounds. So I don't know that you could claim, the usual typical stereotype, but in terms of the diversity of the bias of decision making in industrial software is probably in there, but it hasn't really caused problems yet.
I think we have a fund dedicated for diversity as well, probably just to tackle some of the issues because a lot of the investment teams, a lot of the board members are typically not diverse, right, as you can see in enterprises. I think going back to the AI companies, I think one of the things we pay attention to is seeing the biases within the data sets. For example, facial recognition, we've seen the results that you can, it just recognizes white men better than anybody else, right? And paying attention to that is actually very important because your business decisions depend on it. And so as a board member, we're always constantly looking at biases all across from the board level all the way to data sets.
So the way I understood your question is, where can AI help with removing biases in general? And so, one, AI is a technique, so depending on how you train it, if you train it with biased data, the biases will be built in the AI output. And so, one, you can use certain AI techniques to identify biases. So, at least as using those techniques to identify, hey, is my hiring has been, biased, or my outputs, or my credit scores, or my loan decisions have been biased, is a good starting point. But there are also companies out there, for example, in cases of hiring, etc., can help anonymize certain type of data so that the decisions can be made without taking a certain personally identifiable data into consideration. Similarly, for banks to provide loans without, making a judgment on the person's background. So.
Hi. Could you talk about any deals that you have made or are aware of in the AI for water industry? Smarter water technologies, AI for drinking water, wastewater, stormwater, rivers.
I'm familiar with systems integrators that use software from GE and deploy it as a solution to water treatment facilities, mostly. And this particular systems integrator is principal in North America. I don't think I'd say it's heavily enabled by AI. It's mostly an IoT thing to control the industrial process and make sure things don't get bottlenecked. However, there is a business unit of GE that was sold. I can't remember the name of it, but it's in Israel principally. And they're a big customer of one of my portfolio companies, an edge computing company that does use AI in a limited sense at the edge to sort of make the industrial process of water purification a little bit better. That's tangential, but that's as good as I got.
Most of this discussion has been looking forward. I'd like to look for a minute backwards. In the past, what intellectual property strategies have been used to protect artificial intelligence ideas, and then also looking looking into the past, what 2 or 3 use cases have been most economically impactful?
In the past, or?
In the past.
Oh, darn. Okay.
And that includes up to now.
Yeah. So the question was, what, in the past, who had IP that gave them a competitive advantage?
There was a discussion earlier of unfair competitive advantage. Now, if you got a patent on some AI concept or algorithm, that would confer an advantage. I wonder if you could talk about, or could you make that concrete? Do you have examples where that would work? What would the characteristics of a concept be that would be?
I have examples in the present. My past goes more than 20 years back, so it's off patent now. But I think in general, and this is my personal view, so I could be wrong, advances in AI have been very public, and the community in general is very open and insists on publishing. That's part of the cachet of this industry. And so protecting your techniques is not that common, although there are exceptions. One of my portfolio companies is an Israeli company that has a twist on unsupervised learning that came from some math developed at the University of Tel Aviv. And so they do have protections around that, both patents as well as trade secret stuff. And so their results are slightly better than, significantly better, but not radically better than vanilla unsupervised learning you get out of a textbook. So it's kind of, in that case, incremental. But there have been several companies that commercialize somebody's academic work. It's been difficult to sustain that as the only thing that is the advantage of your company. It's usually what's good enough to start a company, but you can't rest on your laurels. There are a lot of fraud detection companies that are based on the wonderful academic work of the founders, but if that's the thing they stick with forever, they eventually get surpassed by somebody else who's got a better mousetrap. So you really have to stay in front of the steamroller. You can't. Generally, just having a couple of patents is not sufficient barrier to entry.
Yeah, I would just say it depends on how blocking the patent is, and that can completely depend on the patent and what you're trying to protect and what techniques are you blocking, etc. I mean, famously, Amazon's one-click purchasing like that has being blocking is a big deal. There's not much technology to it, but the idea of blocking that one click is so powerful. So it's more important to think of like, what are you blocking from others from getting to you, as opposed to just a technique that you were investing. But maybe after Vijay, Glenn should talk about about patents here.
I mean, I'm happy to talk about it. I'm not a patent lawyer. I agree with everything that you said. Like, most of the real advances in artificial intelligence come from like peer-reviewed scientific journals where you send it out to the community and everyone knows about it, sort of. And getting a patent for software is really tough now. Like, and it's becoming tougher, and it's not something that in the long term is really going to result in sustainable competitive advantage. So there are other ways outside of protection of intellectual property through the PTO that would give you sort of a sustainable competitive advantage over the long term. I wouldn't be sort of banking everything on patent protection because it's difficult to get for software companies, and it's not a long-term solution.
And then the second part of the question is, what are use cases that have had the biggest impact that are built on some AI concept or tool?
Yeah, I think fundamentally, if you look at it, the step function improvements have been around speech, NLP, and computer vision, right? And if you look at the investments, 30% of all investments are in computer vision. And that has started a whole set of industries, whether it's satellite imagery or autonomous vehicles. So I would say those are the big drivers which happened in 2012 to 2014 timeframe. And it's not just that the error rate increased so much, it actually improved more than what humans can recognize, right? That's why you have radiology where AI can actually see better than humans, and you can test satellite imagery better than humans. So that was a step function changes. So that's how we look at CV as computer vision as one of the most invested area in AI.
Thank you.
Any more questions?
Raffle time?
Closing remarks? Got 5 minutes.
I'll be briefer. Not counting healthcare, I have one portfolio company, one use case, one customer, they're saving $50 million a year. And this has drawn the attention of the other companies that compete with the company saving $50 million a year, so they're now also becoming customers. So there are occasionally substantial gains to be made if you live long enough as a company to supply customers like that.
I'll just reiterate, we like to invest in companies in early stages, so seed, Series A, for which AI techniques is a part of what you are building, but you can come up with the market you're going after and articulate the ROI you're providing. And so if you're building something and it's across different sectors, verticals, it doesn't matter, we invest in things which have a huge vision and an unfair advantage going in. Yeah.
All I'd say is, despite all the hype, we're excited about this space, and we continue to invest more and more each year.
Well, I'd like to thank all 3 of our panelists tonight, Kanu, Michael, and BJ. Showed some really great insight into artificial intelligence and future trends relating to AI. So could we quickly give them a quick applause for that?
It's time for the raffle. I know that's what everybody's been waiting for. So has everyone who wanted to enter the raffle already done so? Chances look good. Glenn, I'll let you do the honors. Gotcha. All right, Glenn. And the winner is... Drum roll.
Drum roll, please.
Yes.
The winner is Jankar Mabab.
Coldinism.
Yes.
Let's hear it for Coldinism.
There you go. So the video will be on our YouTube channel, youtube.com/ideaIPO within 48 hours. Stick around, network, socialize, and connect. As a courtesy to Wilmer Hale, we would like to leave the building by 9 p.m. But as I mentioned earlier, the after party is at Rosewood. So I'll see you guys there. So I'm serious. Thanks for coming. I'll see you next time.